Hi guys, I'm Craig Martin, 48-year-old South African, midlife manic, a business owner and investor. I like to think a rational thinker, and the reason I'm putting together the stream is because I've been wanting to get a channel together for some time for rational heads, not just about stock markets, but about all sorts of topics. And of course this week started with what was essentially a panic attack around a possible contagion of the coronavirus. I haven't to date seen any specific facts or justification for such panic. It's Tuesday the 25th of February. The Nikkei was one of the first markets to open yesterday, and it never got the experience of a heavy sell-off, but it's made up for that today, down 3%. Shanghai is down 1.3% so far. And, collective panics, they occur from time to time. We have a huge wave of people. They either buy or they sell together. And there's blood, fear and panic in the streets, but that's a good time to keep your wits about you, to stay rational. There's opportunities for selective purchasing of oversold positions. And always keep in mind that panic can turn into correction, especially at the end of an 11-year bull run, so you don't want to rush in without rational thought. The ASX shed 2.25% yesterday. That's another 1.5% down this morning. Most markets have taken a collective 3.5 to 4% down. It's not to say that they can't go down further. I mean, the FTSE on its own yesterday did a 3.5%. The DAX in Germany was down 4%. And our local market, the JSE All Share, was down 4.3%. Last night, the Nasdaq ended down 3%, although at one stage it was down nearly 3.9%. The S&P and the Dow about 3.4% respectively. The fact is that in a market panic, sell-off can be based on a sudden and extreme fear or a real or perceived danger. And much like real-life panic, at this stage, we really don't know if this is just perceived or if the coronavirus is something that's really going to affect world markets. So we need to try and adopt a rational analysis of a situation. Money always needs to find a home, and yesterday we saw a lot of it running into gold. Oil obviously came off a lot, but gold was up. Safe havens like crypto coins, which I personally don't like, but Bitcoin and Ethereum, they're all up nicely. And gold miners like Harmony was up nearly 15% on the day. Many of our retailers were down. Clicks was down 3.5%. Shoprite was down 4%. Our banks were down. Nedbank down 3.3%. Capitec down 3.5%. Absa down 3.8%. Standard Bank and First Rand were down nearly 4.5% each. And there was general capitulation in the market. But in my next video, I'm going to discuss the implication of the budget speech and the economic climate in South Africa on things like retailers and financial shares, specifically our banks. I mean, if we see a VAT move higher again, say 15 to 17%, or if personal income taxes were to increase significantly, how will they affect these particular counters, retailers and banks? Keep in mind that the JSE still is scattered with some companies that have never failed to deliver on growth in the past, and these are really priced to perfection. And so again, I mentioned Capitec and Clicks because they fit that description. On the other hand, obviously there are many shares that have derated because they've disappointed in some way, like Shoprite of oil was always a darling and then had a little bit of bad news. Aspen was a great darling for many times, and then people started to understand the debt, and so we've seen these shares correct to the downside, and perhaps that's where the opportunity is, because the payoff might be skewed to the upside if the economy improves. Take Aspen. As I say, there's been a sell-off, but now they've also been selling assets to try and stabilize the balance sheet. And they are potential beneficiaries of things like the coronavirus, even NHI to a degree. And they're pretty geographically defensive, not dependent on the rand. And yesterday they held up extremely well. I think they were one of the few shares that were in the green. And so there are opportunities to accumulate shares that may be disappointed in the past. I mean, I've got Aspen under 90 rand. Wasn't quite at the bottom, but I'm still comfortable holding it. I think Steven Saad and his team are doing the right things during this period of consolidation and restructuring. And this share feels somewhat defensive to me, somewhere that I'd like to be while there is uncertainty. Let's assume that the coronavirus reaction or this whole sell-off is overdone. We try and stay rational. Let's say Mboweni fails to deal meaningfully with the current economic challenges, and the country is still doomed for low growth for many years to come, and obviously the financial and social risks that go with this. In this scenario, then, single-digit PE multiples are going to look good. So Aspen, Truworths, Nedbank, these multiples might even prove to be appropriate. The shares might go nowhere. But companies that are on PEs of around 30 plus are going to struggle to achieve the type of growth that you expect. So again, Capitec and Clicks, are they appropriately priced if we have this type of climate? Look, we're going to discuss the budget scenario in the next video. But let's say Mboweni does pull a rabbit out of the hat and the economy does recover and we grow 2 to 3%. Look, it's not going to happen this year, but it's still unlikely that Capitec will all of a sudden open a whole lot of more transactional accounts, loan out more money. Clicks will suddenly sell more toiletries or medicine. In fact, on current ratings, these companies are priced for double-digit growth to come. They're priced for perfection. So if you want a retailer, I'd rather say look at something like a ShopRite, which has already taken some of the pain. It's trading on a PE just over 13. It's not priced to perfection. Or if you want a clothing retailer, why not Truworths, which is on a PE of 8.5. If you're looking for a banking share, there's nothing wrong with Nedbank. It was down 3.3% yesterday, less than the other banks, and it's only on a PE of about 6.5. Aspen is on a PE of 7.3. And even Sasol, which had a real shocker interim results yesterday, I mean, it's probably moved from a PE of around 8 to double digits of 15 or 16, but it was sold down heavily, more than 8% to below 200 Rand. And these are prices that we only saw 14 years ago. And we've got to start rationally thinking, well, many people are scared to buy now, but what is it going to look like when the oil price recovers again? When the Rand stays weak, because you've got to make a call on where the Rand's going to be. I think it's now 15 Rand 15, 15 Rand 20, and it started the year at about 14 Rand. We can see the direction it's going to. So these shares that are priced to perfection, if they somehow disappoint, the chasm between expectation and actual experience is going to be considerable. For example, a re-rating of Clicks from a current 36 historic earnings and about 12.3 times book could easily see 60 or 70% shaved off the share price. So that's my concern with rushing into what are really quality companies, but their share price maybe isn't the best for current environment. So look for companies that can defend their earnings based in real time, regardless of the economic climate. Some of these companies have re-rated, maybe taking pain because of mistakes they've made, like Aspen, Sasol. Sasol spent far too much on this Lake Charles project. But at under 200 Rand, there's a lot of future bad news in that price. A weaker Rand can change, the oil price can change it, and the payoff profile can be skewed to the upside. So this is Craig Martin, midlife manic, and I'm saying that the best time to be buying is when there's blood in the streets, when there's fear, when there's panic. If you like what you've heard, please subscribe, click on my YouTube channel. There's going to be more to come. I'd love to get to 1,000 subscribers, because then we're able to do some exciting things. And look out for the next video, which will be my take on the budget speech just prior to the speech, and I'll put out another one discussing the implications of the budget speech. Thanks for listening.